America's going to come out stronger. But in the short term, this potential trade war, as well as potential deportations, could not only hurt inflation, but also the labor market. And we could start to hear this nasty word that we talked about just a few years ago called stagflation. And man, if that happens, things could look a little bit different.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, who can believe we're just 5 weeks after the election, and the good news keeps coming in. We just got the PPI numbers, and Dale Smothers is with us now to help us make some sense of them. So the CPI, PPI, both coming in higher than expected. What does that really mean?
Hey, Kerry, a little bit higher than we were hoping, but honestly, this is not out of what I was expecting. It's higher than what the experts were expecting, but I do think that we will start to see inflation rearing its ugly head once again. As you've heard me mention many times on this show, I think that this could be more of a balloon landing than an actual soft landing that the Fed is hoping for. We've got a lot of headwind that we're facing here, Kerry, a lot of headwind coming with the administration. And in my opinion, I think it's something that needs to happen. America's going to come out stronger, but in the short term, this potential trade war, as well as potential deportations, could not only hurt inflation, but also the labor market. And we could start to hear this nasty word that we talked about just a few years ago called stagflation. And man, if that happens, things could look a little bit different.
Yeah, well, some would argue that we've already had stagflation for the past several years.
Very true. Very true. And I would not argue against them. The numbers come in with these reports, Kerry. You've heard me say this several times as well. They come in, we trade on the news and we sleep on the revision. Whether or not this one gets revised higher than what we saw is one thing, but you're going to have analysts who look at this, is it 0.2% month over month rise in PPI, and they're going to analyze this and then annualize that 0.2 and say, oh, well, that's right at our target. But the reality is, if we look year over year, we have seen a immediate surge. What did it come in at? 3.4% year over year in PPI numbers. That is an almost unfathomable number for us to then be cutting in. That number altogether is not bad, but to say that the Fed is going to continue to cut in spite of that number, that would be shocking. And unfortunately, I think that's what we're going to see.
Yeah, well, Powell wants to keep his job, right?
Right.
And he's going to have to do something to accommodate. But what about Doge, and what about the push to eliminate needless governmental functions? If they're only halfway successful and they can knock off $1 trillion, that's going to make a big difference, isn't it?
This is going to make a huge difference. And one of the things that it's hard to quantify is the amount of growth that we'll see. The spending will be cut. Hopefully growth follows. With tax cuts, growth follows. Our GDP continues to grow. We've got a mess we've got to clean up here, Kerry. As you're aware, we talked last about how much we spend and our debt-to-GDP ratio. It's off the charts. This Doge move is one that is long overdue, if you ask me. And I think they've got the right people looking at these budgets. I do think that there will be some people who are all about cutting government spending until it affects them, and then the real trench warfare sets in. So we could see a little bit of a line and a division of sides once we see what Doge is going to do. But the theory behind Doge is one that I would support hands down.
Yeah. And people are making fun of it. Maybe they're not taking it seriously. Because if you were alive when Ronald Reagan was president, they promised all these initiatives and everything else. Do you think this one's going to succeed?
I do. When you talk about making fun of and thinking it's not serious, it reminds me of a candidate back, what would that have been, in 2015 that announced his candidacy and eventually won because America is sick and tired of being the bad end of a deal. This trade war is going to help. It's going to feel bad at the beginning. It is war. Unfortunately, no one dies, but a lot of paychecks will be impacted, and it won't go as far perhaps for a period of time. We'll come out the victor with that. Doge is another one that I think is led by a man who is headstrong and could care less what people think of him.
You think?
Yeah, no kidding.
So how much do they have to cut, and what can they really cut? If you can't cut Social Security and Medicare, although you can cut the fraudulent and the improper payments, but if that's off the table, that's the majority of the spending in the economy, right?
Sure. And when you look at the numbers, it begins to get difficult to see where they're going to cut trillions of dollars of spending. But it's very much like a drug, and once you've had it, you can't get off of it. And these politicians are addicted to that spending. If you think 20 years ago, if we could have done without it then, surely we can get to the point where we don't need it now. A lot of the government, you would think, and a lot of the government spending is going to immediately impact people in ways they never imagined. And again, that's where that pushback is going to come from. But if Social Security is not on the table, which I'm 100% with the clients that we work with, Kerry, you can imagine Social Security is a big part of what we plan around. I'm not a big advocate of touching Social Security. It needs reform. It needs to probably be on the backs of those who are, say, under the age of 50, and maybe it is means tested to a certain degree. But if we get into cutting things, I think Social Security should be off of the table. With that being said, we know that we've got to be a strong country, so our war budget should be off of the table as well. Our defense is spending. But here's what I think. Go ahead, Kerry.
I don't know about that, because look, the half the money that the Defense Department spends is probably wasted here, right?
This is where I was actually getting to that. I think a lot of fluff is in the defense spending budget. A lot of people have probably made a whole lot of money, Kerry, as you can imagine, by charging 400 times what a bolt should cost or what a piece of scrap metal should cost. This type of expense can be weeded out of the Defense Department, and we're still strong. You think about advancements like technology advancements in war and defense that could also help a ton when it comes to staying a strong country, keeping our borders secure, but cutting some expenses. Here's a big one, though. You asked me, what can we cut? I think one of the things that we need to stop doing is assisting countries who don't like us or don't really need the assistance. This type of shipping money overseas when we have people in North Carolina who are still feeling the effects of the hurricane. I don't think a single dollar should be sent to countries to fight their battles until North Carolina and Florida looks as if it never happened.
Mm-hmm. Yeah, I couldn't agree with you more. And so but they're having the spending orgy till the very end, isn't it?
This is true. That's exactly right. And when the music stops, I'm afraid that the market might not react favorably to it either. Speaking of the PPI, if you think through this, if the Fed continues to cut, which is, again, what they expect to do, I've even heard talks that they're considering a cut in March as well, already predicting that. The market is buying that up. They're already taking that into effect. And you know this very well, Kerry. They have already priced in December's price cut. So if a rate cut becomes a rate pause, well, now we see an immediate reaction in the market, and that reaction sets people up who have been predicting recession or been predicting a pullback. This is it. And so it becomes a fulfilled prophecy that was self-fulfilled, and it's all a house of cards if we're not careful.
All right. So what is the investor supposed to do here? The market's looking a little toppy right now. It hasn't done much as of late. Do you think that's going to be the future here or what?
Yeah, I do think we'll see this constant bounce off of the support and restraint until eventually something breaks through. Either we have this, potential growth opportunity that we hope comes from a Trump presidency, or we could see the market start to take a nosedive if inflation rears its ugly head, and God forbid the Fed has to now start hiking rates once again to combat that side of their dual mandate. What an investor should be doing from our perspective, we deal with a lot of people who are close to retirement. And here's where we have to be. If we're close to retirement, losses hurt us more than gains help us. In this environment, we have to be conservative in our approach. I like buffered strategies if we want to still participate in market upside, but have some downside protection. There are buffered ETFs that buy packaged options for us that give us upside participation and some downside protection along the way. I like those for an individual who still wants to have equity exposure. If you're considering setting on the sidelines, though, a 4.5% type of money market's not a bad place to be to see how things shake out. So a cash-like position isn't terrible. Gold is touchy. Right now, gold, in my opinion, could be a place that you could lose a lot of money, or you could see a little bit of capital appreciation. I don't expect it to grow much. I don't expect gold stock to appreciate much, but we could see volatility in gold, especially perhaps Bitcoin. I know you're a big fan of Bitcoin.
Sure.
If Bitcoin ever becomes an actual alternative to gold, we could see people flooding out of gold and into Bitcoin, which would help the Bitcoin and crypto investors. But those who are looking for the security and stability of gold, you're aware of this. Over the last couple of months, we haven't felt that stability in the gold prices.
All right. So interesting situation here. You got to wonder of, the situation seems to be unsustainable, right?
Yeah, I hate to use that word, but it is. It's certainly going to have to change in some capacity. Things can't continue to go up. And again, if you're an investor who is considering retirement anytime soon, the number one rule of investing, Kerry, me and you both came up with this: you buy low and you sell high. If you are considering sales, now is the time. When the music stops, it could be too late. I like to think of the game that we used to play as kids, musical chairs, right? Musical chairs is that game where eventually chairs start disappearing and the music stops and you've got to find a seat. I think more people have gotten involved in the game recently than ever before because of how the market has increased month after month after month. And like you said, good news continues. But when more people get in than there are seats and the music actually stops, for our investors, we just want to make sure that we're really close to a seat and we're safe to play for the next round of the game.
So you don't think we're going to get tired of winning?
Well, I don't think we get tired of winning internally, but I do think that with one pull, it could be a house of cards. What is your opinion?
Right. Could be a house of cards, or like you said, a balloon landing.
Absolutely. Yeah. And in that analogy, the balloon landing is what we think is going to be soft ends up seeing the nose of the plane starts to rise. And it's all about the inputs in the controls that you put in there as to whether or not you land safely or you crash altogether. I don't have much faith in the Fed.
We could say it would be a partial parachute opening.
Right.
Doesn't kill you, but you're not going to land softly and bounce on your butt. You could get injured in the process, right?
You might have some bumps and bruises along the way. Yes, sir.
All right. Hey, Dale, just tell us, where do we find you on the internet? How do we connect with you?
Yes, sir. So our firm, RD Smothers Wealth Management, you can find us at rdswealth.com. You can catch our podcast, the Retirement Matters podcast, on any podcast streaming service of your choice. Run over to our website, sign up for our newsletter, or shoot us an email.
All right. Excellent. Hey, the link is in the show notes to this interview on financialsurvivalnetwork.com. While you're there, we ask that you sign up for your free newsletter, like 60,000 plus other FSN members have. And if you've got a question for Dale, myself, shoot me an email, kl@kerrylutz.com. Dale, we'll talk to you again real soon. Thanks.
Talk soon. Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.